Good afternoon and welcome back to Realty Talks. Good afternoon, Realty Pros. I'm glad that you can join us today. Last week we started on, talking about business basics. We had our very own Shay Porter, our owner, mentor, and fellow Realty Pro. So we want to welcome Shay back to continue the discussion and the information he shared on business basics. Shay, go ahead and get started for us. Thank you.
Thank you, Angela, and all of our Realty Pros. Good afternoon, everybody. Last week, we talked a little bit about establishing your business as a business. And in particular, we spoke about the LLC and the structure of that and some of the benefits for that. And in that discussion, we started to mention a little bit about strategies for building your personal credit. And a lot of people had responded that they really want more information, or they wanted me to walk through that information with them so that they can work on their personal credit. And that's really, really important in order to help you build this business leverage that we're talking about. But one of the other things that I really wanted to do is kind of put this topic in the forefront of your mind, because oftentimes you're working with people who are potential buyers, and some of the feedback you might get from a lender is that they need to work on their credit. And so what they'll then do is they'll start to try to do things to fix their credit. What I tell them is that you're the person that broke it. Let somebody else fix it. And so if they don't know strategies to fix their credit, then they might not really help themselves in terms of getting the pre-approval. So what I started doing for my clients, just as a free service, as an additional service, and I make sure that I always give the disclaimer that I'm not a financial consultant or anything of that nature, but I'm going to give them some strategies, and I always say that work for me. So I'm going to say the same thing to you. Today's conversation is basically some strategies that I have employed over the last number of years that took me, and I'm not ashamed to say, from a 472 credit score up to close to 800 right now, right? And so the strategies are, they're effective. They actually work. They've worked for me. And I'm just going to outline them for you, because what I hope is that if you are in a similar situation or have clients that might be in a similar situation, you'll be able to share some of these tidbits and some of these strategies with them in order to help them build their credit score. Now, when I say credit score, let me make sure that I clarify this. And I'm not saying that any of you don't understand this. I'm just going to make sure that we're all on the same page. I'm not going to be talking about their credit history or their credit report. Okay, the credit history and the credit report are like the qualitative aspects of your credit portfolio. I'm only speaking about the quantitative piece, which is the score. And the reason why I focused on the score is because I know that when I send my clients to the lender often asks me, what is their score? Okay. And depending on what their score is, and they're normally looking for about a 640, right? It can go as low as 580, but that's a whole lot of pulling rabbits out of hat. And I really want them to have a strong credit score when I send them over to the lender. Or if they don't know their credit score, the lender tells me that they need to improve their credit score. My goal is to get them to at least a 640 and to give them strategies to continue to increase their credit score. All right. So the credit score is the quantitative aspect, and that's what I'm going to be focusing on today. The credit report and the credit history, that's a qualitative picture. And what I often suggest to my buyers is that you don't touch that. And here's the reason why. And I'm gonna just give you a piece about the qualitative. Many people can look online and they'll say, hey, we can help you remove stuff from your credit report that's causing your credit score to be low. And there is a correlation between the two. However, what I've learned from the lenders, because my goal is to sell you a house, not to necessarily fix your credit, but they go hand in hand. But I don't want to say anything on the qualitative aspect on the credit report side, because my lender is really great and he knows all kinds of things that he can do to make adjustments or explanations for the qualitative aspect, which is your credit report and credit history. His main concern for my clients is for them to have the score that he needs in order to start the process. So I focus on the score, and as real estate professionals, that's what I wanted you to focus on. But the one thing that I like to do before I share anything with anybody is I like to experiment on myself, because if it works for me, then I know how to do it. I know how to share that strategy with other people. And pretty much that's what I'm going to be sharing with you today. So I don't tell people to remove things from their credit report as part of my presentation to my clients. And the reason why, like I said, is because my lender knows what things to leave alone because they're about to fall off, and there's guidelines about when things automatically fall off. And if you touch them, then you might be restarting your date and making the timeline, reestablishing the timeline for this information to be reported on your credit. And then if the credit, the people who are holding you as creditors actually can prove that you do owe the debt, it reestablishes that debt. So I don't touch that aspect. I only focus on the credit score. With that being said, this presentation today is simply about credit score. I just wanted to make sure I made that perfectly clear. I'm not going to even answer any or entertain any questions regarding the credit reporting aspect, okay? But the strategies that I've used, here we go. So this is a strategy I like to call how to increase your credit score, right? Again, I told you from the beginning, my credit score was extremely low. I didn't really have a knowledge base of what credit was used for. I thought I had a good government job at the time. I thought I had money, and I was good to go. I didn't really use credit cards. I didn't really understand it. And I had been told, like many people in my community have been told, to avoid credit cards. They get you in trouble, you're going to be in debt. They're only for emergencies. If you use them, you're going to get in, to a situation where you can't get out of, et cetera, et cetera, et cetera. So all of those horror stories made me absolutely avoid credit. It wasn't until I started doing real estate and I started realizing that there's a lot of money that is needed in order for you to purchase, and in order for you to get into the investment, you're going to need to be able to have people trust you. And one of the things they're going to look at is your credit portfolio. They're going to see whether or not you pay people on time. And I think not necessarily that my situation at the time was not paying people on time. I just didn't even have any credit cards. I just avoided it. And I might have had some student loan debt and all that kind of stuff, little stuff like that, all kind of life situations that hit you in cross section. But the point was I had to realize that this situation had to be remedied if I was going to be effective in the real estate game. So with that being said, as I started to learn more about real estate, I started to realize quickly how important credit was and personal credit was to even establishing myself in the business arena, as well as helping my clients to get pre-approvals. So I started doing a lot of research on credit, and I started talking to people, and they had people who were getting paid to basically, quote unquote, fix your credit. And some of these people that were getting paid to fix your credit, again, they were working on your credit history. And then a lot of times that would disqualify a lot of people from getting pre-approval. So I thought that was counterproductive. And then talking to my lender again, he said the most important thing was to focus on the credit score. All right. So in this presentation, I'm going to go through some of the most important things that I've learned about how to increase your credit score, which are first of all, you want to get rid of the existing balance. And there's ways to do that, and I want to talk to you about that. One of them is the snowballing of the debt. I want to snowball it. I'm going to talk to you about my belief in credit cards only, never use debit. I want to talk to you about knowing the importance of the dates for credit cards. I want to talk to you about paying every day. I'm going to mention about rotating cards, and then I'm going to give you a strategy known as piggybacking, which is a leverage situation to help also build your credit score. All right. All right. Now, that being said, I want to talk to anybody. And I'm going to ask for some participation right here. Is there anybody right now that thinks this is going to be particularly useful to them in either their personal situation or in helping a client? If so, you can give me a thumbs up or just raise your hand so I can see it. So go to your little more thing and put a raise your hand, because I want to make sure that this information is useful. If not, we can move on. All right. I don't see anybody. Okay. Thank you. I see. Okay. Good. Awesome. And some of you I've already actually shared some of this with, and some of you have already started to see improvements in a very short period of time. But the most important thing in terms of establishing this whole system of getting your credit score up is to have credit cards, and to, first of all, if you have credit cards, you want to get rid of the existing balance. Now, if you have the cash and you can pay off your existing balance, you're going to want to do so immediately, and you'll understand why as I finish the presentation. Once I go through this presentation, this first bullet is going to make more sense to you than it might right now. Some of you might say, well, I have the cash, but I don't want to use it because then I'm going to have to go back and pay it if I use my credit card, et cetera, et cetera. But I'm going to give you some insight into how to start using your credit cards so that you don't end up in the situation that you're concerned about. Right? Now, how do you pay some of this debt off? Well, there's a thing called the snowballing method. A lot of people might know what that is, but if you don't, I'm going to tell you it's a strategy where you first of all list all of your debts, meaning your credit cards, okay, and even your other debt from smallest to larger. But in this particular, for all intents and purposes today, I'm specifically talking about your credit cards, okay? So you want to list these credit card debts from smallest to largest, okay? Regardless of whatever the interest rate is, that has nothing to do with how we're going to do this snowball, okay? The second step is to then, hear me out, make multiple payments. And we're going to talk a little bit more about that. But your multiple payments should be equal to the minimum payment on all debts except for the smallest card. So in other words, while you're doing this strategy, you want to continue to make your payments on your other cards. You can't just stop making payments on the big cards for the sake of focusing on the smallest card, because that's the idea with snowballing. The idea is to focus on the smallest card, okay? So the smallest card, say for instance, if you have a card, and we'll just use easy numbers. Say for instance, you have a card, there's one of them is, the smallest one is 1,000, the second one is 2,000, 3,000, and 4,000. You got 4 cards, each with 1,000, 2,000, 3,000, and 4,000. You want to continue to make the minimum payment on the 4,000, 3,000, and $2,000 card. But the big focus is paying off the $1,000 card as quickly as possible. Now, in that step number 2, I threw in a little monkey wrench. And this is where it gets a little tricky, but you'll understand more as we go along. It says make multiple payments equal to the minimum payment. So the minimum payment, say for instance, the minimum payment on your $4,000 card is $100. Some of you might want to pay that $100 once a month, bam, get it over with, etc. What I do is I know I got to pay that $100 on that $4,000 card. I'm going to divide that $100 into multiple payments. And on the next slide, that will make sense to you. So just keep that in mind, and then we're going to continue to move forward, all right? So on step 3, it says pay as much as possible on your smallest debt. So again, I want to figure out how much can I afford to pay? Do I have $1,000? If so, I'm going to pay it off today. All right. And then now that minimum payment, I can divide into the next, the $2,000 card. I can start to use that same amount that I would have been paying on the $1,000 card every month to now start to tackle the $2,000. So I'm going to add that. I want to increase whatever the minimum payment is on that $2,000 card. I'm going to increase that by whatever I would have paid on the $1,000 card and snowball that into the $2,000 card. Then I'm going to wipe out that $2,000 card very quickly. And then I'm going to take the amount that I would have saved on the $2,000 and the $1,000 card, and I'm going to start adding that money to the $3,000 card. Once I wipe the $3,000 card out, now I'm going to take whatever I was paying on the $1,000, the $2,000, and the $3,000 card. I'm going to increase that payment, that $100 payment for that $4,000 card that I said before, by the amounts that I was paying for the 3, 2, and 1 that's now gone, and I'm going to wipe that $4,000 card out. It's not going to happen overnight. You didn't establish it overnight, but that's the snowball strategy. All right. Then step number 4 is what I just explained. You repeat on the next smallest using the savings from the paid off card to increase the amount until they're all paid off. All right. So that's the snowballing techniques. Does anybody have any questions on that? All right. I see somebody has something in the chat. I can't see what it says, Angela. So if it's a question, I can entertain that. But does anybody have any questions or comments on the snowballing before I move on? Is everybody still there?
Yes.
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 Y'all scared me now.
We're
Taking notes. Taking notes.
All right, you gotta say
Yeah, we're
something.
here. We're here.
Yeah.
We're here.
Yeah, I thought it went dead or something. Okay, let's go. All right, here we go. All right, now here's my this one is the one that scares everybody. Credit cards only, never use debit. Now, when I first heard that, it kind of freaked me out. And the thing is, you know, we used to have this thing, and we talked about this before, where we used to like taking millionaires out to lunch. And we tried to do it like every other Friday or once a month. And then it came twice a month. And what we consistently heard over and over again was these multimillionaires, they weren't really keen, fond of, or even knew or used debit cards. They thought it was a joke. And here I'm using my debit card every day for almost every purchase. I mean, at the gas tank, and you know, I'm using my debit card for everything. And you know, they were always willing and exciting to pay the credit, you know, pay the bill, and they dropped these credit cards, and I would look like, man, what kind of credit card is that? I've never seen one. It made noise when it hit the ground. It made it sound like a metal clinking. Oh, that's a titanium. That's a platinum. That's this. That's that. And, oh, this one gives me rewards. No, let me take care. This is a diner's card. So they all had these credit cards, and I'm sitting up there saying, how can they afford to pay with the, you know, with these credit cards? Well, I didn't know what I didn't know. All right. First thing is that debit cards do not ever help your credit situation, right? The word credit card is right there in the word credit score, credit. Credit cards help your credit situation, right? You want to make sure that you stop using your credit cards now. I mean, start using your debit cards now. Only use your credit cards, right? That, when I first heard it, I really started to get the concept, but I didn't have a strategy. I understood what they were doing. I didn't know why they were doing it. I didn't know how they were doing it, but I needed to figure out a strategy that would work for me. So I found a simple strategy. It has worked miraculously, and that's what I'm going to be sharing with you all today. Now, that being said, if your credit situation was kind of like mine and you didn't even have a credit card, and you're starting out and your score is kind of low, you might want to choose a prepaid card. It doesn't matter. If it's a prepaid card and all you have is $200, $100 on the prepaid card, in order to get you rolling in this situation, because what we're doing is we're building leverage through credit, right? You want to go ahead and apply for a prepaid credit card. Now, it's not going to benefit you in a lot of other ways that other credit products will, but it's going to get you started in building your credit score, right? And in fact, if you just get this one credit card, you're going to start using it the way I'm going to explain in a second. If you have credit cards and your balances are already zero, that means you did the first part, you got that existing balance down. You want to then become a little bit more selective. Now, what I recommend is if you don't have Credit Karma, you want to download Credit Karma. I like Credit Karma. I like Credit Karma for a number of reasons. One, it gives you a lot of ideas about credit. It teaches you about credit. It tells you how you're doing on your credit score. It tells you how you're doing in your credit history as well. And it gives you suggestions on how to adjust and make proper adjustments for all of it. The other thing it does is it sells you products, meaning the credit cards, okay? Or it offers you loans, or it says you can lower your insurance. It gives you all of these little products that they just throw in there, and that's how they make a lot of their money, and that's why they're offering you the service pretty much free. And then it's a good way to check your Equifax and your TransUnion score. Now, with the Experian, I downloaded Experian app, and they have a paid version and a non-paid version. I've never bought the paid version, so I don't know what it offers, because the non-paid version gives me all the information that I actually need in order to do what I'm going to teach you guys how to do today. So you want to set yourself up a little bit, and I want you to use, again, the technology to help you be more efficient. So with Credit Karma, I can see two of my TransUnion and my Equifax scores every day. And then I have to look at Experian separately. So those are the three major credit bureaus, TransUnion, Equifax, and Experian. And from that, I can get a picture of, or a snapshot of where I am right now. And then I can continue to do this system that I'm teaching today in order to build my credit. Do anybody have any questions before I go any further? Because I said a lot. I'm saying a lot. I'm moving quickly because I want to make sure I use up all my time.
No questions.
Right? You say you don't have any questions? Okay, good. All right. All right. Next thing is I want you to do is, once you get that credit card, you want to set up your payment method. Now, I don't want you to be mailing checks or paying it. I want you to pay directly on the app. And what you do is, when you get a Capital One card, you download the Capital One app, you go ahead and put your credit card information in there, and then you can see that credit card information right on the app, right? The last thing you want to do is you want to use, and I can't see what I'm saying because it's a little line in front of here, but basically I know what the slide should say. You want to use the payments app. You want to go to the payment section of the app, and what I want you to do, instead of using your bank routing number or your checking account number, what I want you to do is to use your debit card that you normally would have been using, and I want you to make that your default payment for this credit card. Right? Now, many of the apps allow you to use the debit card as the default payment. Some force you to use your routing number and checking. If they force you to use your routing number and checking, that's fine. It's just going to take a little bit of time out of the system of payment, and it's going to kind of slow you down in terms of your progress. So what I like to do, and I say, Capital One, not the MasterCard from Capital One, but the Visa products in particular, they allow you to use the debit card in order to make payments directly. Many of the banks don't. They make you use your routing number and your checking account. And if they do, you want to kind of monitor it to see how quickly they are accepting that payment, because that's going to tell you a little bit about the timing that is important in this system, right? So when I say timing, I'm talking about quite a few things, right? One of the things that we're going to talk about later when it comes to timing is paying every day. But for right now, once you get this credit card, and I'm trying to just go step by step, once you get this credit card, there's some important dates that you're going to want to know, all right? What's the most important date that you think you should want to know? Anybody?
when you pay it.
Statement closing date.
Okay, somebody said closing date. What do you mean by closing
The
date?
statement closing date.
Statement closing date. Okay, I think we talked about that. All right, who else?
Right, the due date, I guess.
The due date. And what else? Anything else? All right. Well, I heard the statement closing date and the due date. Well, let me say this to you guys. The least important date is the due date.
Okay.
In fact, the due date is the date that they'll allow you to move around any way you want to. All right. The due date, you can call them and say, I want to move my due date to the 1st, or if your birthday is on the 25th, you might want to move it to the 25th so you'll remember the due date. But the due date is really the least important date because that's the date that they're asking you to make a payment after they already have assessed all the fees, any fines, penalties, whatever else they want to assess, interest rates and all that good. So that's all going to be whatever the due date is. They've already assessed that from previous information that they got. The statement date, and I heard somebody say statement date, is critical because whatever balance, whatever fees are on the statement, whatever is written down to you is what is and will be reported to the credit bureaus, all right? So you really need to know the statement date. One of the strategies that I did in the past when I first started out is I actually wrote in a Sharpie the statement date on the back of the credit card that I was going to be using, so I knew what day the statement day was. After a while, I started to memorize what day the statement day was on the back of the card because that Sharpie, believe it or not, is not permanent. It starts to fade if you keep using that credit card, right? But that statement date tells me the day to stop using that particular card, all right? So let's call that card card A. Now, here's the thing. In the ideal situation, if you're starting out, this might not be possible, but in an ideal situation, on that statement date, I'm going to suspend using that particular card and I'm going to substitute it with card B. Card B is the card that I only use between the statement day and the report day, all right? The report day is the day that they actually send that statement over to the credit bureaus as a report to put on your credit. With the report day, though, nobody ever knows where your report day is. You have to actually call the credit card company, wait on hold, speak to a representative. You're gonna ask them about the report day. Now, a lot of them, they never been asked that question, or they either just don't want you to know because they seem to always pretend like they don't know what a report day is, or they gotta call somebody else and figure it out. But you wanna know the report day because you wanna know when you can start using your card again, all right? So the statement day through the report day, I'm using card B. That's my card B days, all right? After the report date is over, I can resume back with my main card, card A. And there's a reason why I have a main card and a reason why I have a B card or A card and a B card. My A card is my everyday card. My B card is my card that I only use between the statement day and the report day of my main card. Any questions about that? Did I throw anybody off? Everybody still with me? Somebody say something.
Yep, we with you.
All right.
Yep.
Now, once I have all of that established, I've set up my accounts, I've set up my payments online, I know my statement day, I know my reporting day. The due date becomes insignificant, and here's why. I'm going to pay every day. I'm going to make a payment every day. So how do you make a payment every day? Well, you should have paid down all your balances if you follow, this strategy. So you don't have any balances on your cards. So what are you doing now? You have to change what I call a mindset. You got to have this mindset. This is the mindset that you must have. Your debit account or your bank account or whatever you're using is now called your cash account. Your credit card, your main card, your A card is called your credit account. So what I do every day is I transfer money from my cash account to my credit account, and I use my credit cards every single day. I no longer use my debit card for anything. Only thing that you will find on my debit card statement is payment to Capital One, payment to Capital One, payment to AmeriExpress, payment to AmeriExpress. That's the only thing that you should see on your debit card statement. All right. Now, if you go to the bank and get cash, then it'll say cash withdrawal. And that's fine, because sometimes you're in a situation where people just don't take credit. That's very rare that you find that nowadays. But there's a reason why I want you to use your credit card every day. And the reason why is when you pay that balance, most of us, we only pay our credit card balance once a month. If you pay that credit card balance once a month, you only add 1 positive point to your credit score. When you make multiple payments throughout the month and multiple times, it adds multiple positive points to your credit score. So if you make one payment a month, you get 1 positive score, and then they factor in if you have any balances and any fees and fines or interest and all of that, and they subtract points from that. So you might end up with your credit score going down. If you've had any inquiries, anything, your credit score might go down. But if you have all these multiple payments in a month, and then they subtract, it depends on the formula that they use, it might just level you out. You might just stay at a certain credit number for a certain period of time. But eventually what's going to happen is the number of payments that you made is going to start to supersede the formula or algorithm that they're using to subtract points. And that's how your credit score is going to start to gradually increase. All right, does that make sense? So I tell the younger generation that I have, I say, it's like playing a video game. You just have to score more times. And how do you score more times? You break that 1 payment up into multiple payments. All right. So you can use the following strategies to add positive points to your credit score rapidly. Strategy 1 is to only charge, and this is important, only charge what you can afford to pay for today. Okay. You don't want to fall into the trap that everybody warned you of. And that was because nobody taught you how to use a credit card. The credit card is simply, I'm looking over in my bank account, I'm seeing what I have over there. I'm thinking about what I have to purchase today, whether it be gas, a piece of chewing gum, potato chip, or if you're married to a sweet broker lady and she wants a gift. You got to look over in that bank account and see if you can afford that today. If you can, then you want to go ahead and charge today and pay in full tomorrow. The reason why I say pay in full initially is I like you to use strategy 1 is because I want you to get used to doing this over time. If you get used to doing this over time, then it becomes a habit and a discipline, and then you can start to really diversify and you can start to trust yourself to use strategy B more often. Strategy number 2. Strategy number 2 is then, say for instance, you have you're married to a sweet broker lady and she wants something that costs a couple of $100 or whatever dollars. I'm not leaving that alone. Okay, she wants something that costs some money, and you look over at your debit account saying, well, all right, but hey, we don't want to just pay all of that tomorrow, right? Well, what I do is I look on the back of my credit card and I see what my statement day is. And I look at the calendar and I see what today is. And then I'm going to divide that large amount into smaller daily payments. And I should have put the word daily in. Daily payments over the number of days until my statement day. I hope that made sense for you. All right. So instead of me, when this is only strategy 2, this is for the people who get used to this system. And once you get used to the system in strategy 1, then you can trust yourself. I'm going to make the payments. I just don't want to pay that big bulk tomorrow. And I can get more points added, positive points added to my credit score if I go ahead and make multiple payments throughout the month. All right. So that's what you do. And you want to divide. You want to take the number, look at the number of days. So if the day is the 7th and my statement day is the 27th, I have 20 days that I can divide that big number into. And I still got to remember that I still got to pay for my regular daily things. So for instance, if I divide that number into 20 payments and it comes out to be $20 a day, well, that's $20 a day in addition to whatever I purchased today. And I hope that made sense for everybody, all right? On the statement day, say for instance, you didn't calculate right. You want to make sure that you pay it down so that you have no more than 30% of your total credit card balance on that card. So if you have $1,000 that you can use on that credit card, you want to make sure that on the statement day, it's down to $300. All right. You want to make sure it's low. If it's lower than 300, that's great. But you want to get it between 0 and 30%. No more than 30%. 0 is your goal. All right. And this is the key. All right. The key to success in this strategy is you have to discipline yourself. You have to have a regimen for doing this. So every day I make my charges. Okay. Every night, if possible, because it depends on when the credit processing is for that card that you're using, you got to start to know when it processes. When it processes, then it'll allow you to make another payment the next day. All right. So if it doesn't process, if it processes immediately, then I can make a payment tonight before I go to bed. If not, first thing in the morning, I'm gonna get up, I'm gonna do my morning routines. And part of my morning routines is that I'm gonna check my account balance and I'm gonna make the payments from yesterday. Do not be tempted to charge more than what you have in your cash account, okay? That is the great temptation. And this is why people tell you to avoid using credit cards, because you don't trust yourself. Well, here's the thing about credit. Credit is about trusting you. If you don't trust yourself, then nobody else is going to trust you either. This is not going to work for you. Forget the whole presentation and you can go back to the LLC that I talked about last week. But the whole point is to make this a habit. So you discipline yourself so that you can trust yourself to make this payment and to make sure that you're paying this stuff off every single day. Is there any questions about this last slide before I go on?
Oh, no, I don't have a question, but I was thinking about what you were saying about the statement date and the report date. And the way I was taught is that it's a green light period when you can use your card, and then there's a
Red light.
period when you can't.
Right. So
And
that's absolutely correct, Dee. Absolutely correct. And the trick is to make sure that you're cognizant. That's why I said, take a Sharpie and just put a number on the back of the card. You can put a 27 and then you can put a 30. Okay, the report date is 30. The statement date is the 27th. And I can start using this card on the 31st or the 1st, whichever, comes after the month. Now, for me, to give myself a little bit of wiggle room, I'm always go 2 days after the report day. So if it's the 30th, I might not use my card again until the 2nd of the month, my main card. All right. Now, all that being said, you want to make sure that you pick a credit card. And I think I skipped somewhere. You want to make sure that you pick a credit card that suits your lifestyle. That's what I wanted to go back to. What do I say? Let me find that slide. I know I had it here. Yeah, there you go. Stop using your debit cards, use only your credit cards. And I said, if you start out now, if you have credit, you want to choose a credit card that suits your lifestyle. Now, what do I mean by that? If you're like me and you're a foodie, I don't know if you all can tell I'm a foodie, and I like to travel. So for the biggest bang to my buck, is for me to find credit cards that give me either cash back or rewards points for dining out and for travel. All right. So as you explore the cards that even offer to you either, and I use a couple of places, I use NerdWallet, or I use Credit Karma, or even Experian, to see what cards, based upon what their information, because they're going to ask you for your information too. So the more information you put in the Credit Karma and Experian, it'll tell you which cards you are most likely to be approved for. So they give you ratings from outstanding to excellent to very good, to fair to poor. All right. Those that are outstanding means they're pretty much going to approve you based upon the information that you have in Credit Karma. Those that are excellent, you got a good chance. And it goes down from there. So you just need to read the descriptions, and then you can apply for cars, but try to choose cars that suit your lifestyle. They have cars for people who, like to travel, who are into, dining, if you want to use it, for fuel or for all kinds of things. They give you more cash back or more rewards for using those particular cards in that particular way, because all of the credit card companies want you to use their money, because the hope is that they're going to make money off of you when you pay the minimum payment. But here's the other thing that I meant to tell you. By doing the strategy of paying every day, you're going to avoid a lot of that. All right. When you pay every day, what's going to happen on your statement is that when you get to the strategy number 2, it says no more than 30%, your statement balance is going to be very low. And if it's a 0, then what's 50% of interest on 0 balance? It's a 0. So you're not going to pay interest. You're not going to be making anything. Then the other thing is, if you choose a lifestyle card that gives you rewards, points, cash backs, etc., basically they're giving you money back for things that you would have purchased anyway every day using a debit card, getting nothing back. And when you do that, guess what? If you were using your debit card like you have been, you not only are you losing that money immediately, you can't get it back, it's gone, and you're not going to get any cash back or any rewards for using the money that you're going to use anyway. Now, if you think about how much money you spend in a year just on buying things, and you know that you might get 5% cash back, 3% cash back, you do the math and see what your check might be or what your cash back value might be at the end of the year. Then you'll understand how I can go travel whenever I choose to. I'm not using my money. I'm using the money that they gave me back from using the credit card to charge stuff I was going to buy anyway. And that's the leverage that you have with a credit card, and it's building your credit score. So for me, it just makes perfect sense. Then you say, okay, well, what about those cards that have a high balance in order to have them for an annual high balance? And I give you an example. I love my American Express Platinum card. It gives you so many different benefits, right? But it costs a lot of money. It's like $700 a year just to have that card. And people see that, they're like, oh, I'm not paying the $700 a month. I mean, the $700 a year just to have a credit card. That's crazy. And you're absolutely right. It would be crazy. But here's the thing. The rewards, the cash back, and the benefits that I receive from using that card, by the time I get that 695 balance, all I'm going to do is tell them to use the points. And they're not even going to use all of the points, because if I'm using that card on a regular basis, I'm going to have thousands and thousands and thousands of points. And that $695 or $700 a year that they're charging me, they're just going to remove it from my points. And I'm not going to even know anything happened. So essentially, I'm getting the card for free because I use it all the time. The other thing with the cash back and rewards cards, you want to make sure that when you get them, you read it, because what they do is try to get you to start using that card initially. So what I do when I get a new card is they give you a time period. They say, if you use this card in the first 3 months and you charge $3,000, we'll give you 130,000 bonus points, or we'll give you $1,000 cash back, or whatever. I'm going to put card A aside because points that I'm gonna get from there is fine, but it's not gonna double and triple my points like this introductory rate for this new card that I just got. So now I'm going to replace my card A with the new card, doing all of the same things, knowing the report date, knowing the statement date, etc. And I'm going to start swiping that card like crazy to try to get that rewards bonus that they're going to give me for this new card, because they only do it once when you as an introductory to the card. That's to get you to use it. Then you compare apples to apples and oranges to oranges and see which card is actually giving you the most points for your lifestyle. And then you might want to replace the old card A altogether with a new card A if its bonuses are, in terms of your lifestyle, is giving you more rewards and more cash back than the first one did. So once you start to do that, in addition to building your credit score, you're getting all this cash backs and rewards, you can say, hey, you know what, it's time for me to travel. I need to, you know what, I want to buy a gift for the broker lady, but I don't want to balance it, pay it off, anything. I'm just going to use points. I want to give a gift to a friend. I'm going to send them a gift card and I'm going to use my points. Or I'm going to use my cash back. Or I would like to go out to a fancy, see a fancy play like an Erykah Badu concert that's coming up August the 7th on the same day as, never mind. But anyway, I'm going to use my points to purchase those tickets. All right. And so then you're getting free money from the credit card company for using money that you were already going to spend anyway. All right. The last strategy is known as piggybacking. And this is another leverage strategy. Now, piggybacking is when someone becomes an authorized user on another person's credit card for the purposes of boosting their credit score. So for instance, if you have a relative, a friend, a cousin, an aunt, Pookie, Nene, whomever, and you know that they have consistently had great credit, they're up in the 7s and 8s, all right? You can call Pookie and Nene and say, hey, listen, I want to boost my credit score. Would you mind making me an authorized user on your account? I don't need a card, all right? Now, once you do that, your credit score is going to start to increase because of Pookie and Nene or auntie or whoever it is, grandma, whoever, credit, all right? Now, this is not to be confused with being a joint account holder. You don't have to be a joint account holder. You're just an authorized user on the account. The difference between the two is that the authorized users are not legally responsible for charges made on the credit card, whereas a joint account holders are. So you don't want to be a joint account holder because you don't have the kind of paper that person may have to pay off their bill anyway. But being an authorized user gives you all of the benefits and none of the responsibility. The authorized user gets the full account history reflected on their credit report. They will get credit characteristics such as payment history, the age of the accounts, the utilization rates, etc. When these characteristics are positive, they can help raise the authorized user's credit score. If they are not positive, however, the authorized user risks lowering their credit score. But here's the great thing. You can always call that credit card company and tell them that I no longer want to be an authorized user on this account. Please remove me. All right. And once your credit profile is there, your credit score is pretty much set. Now, that being said, that's another thing just brought back to my mind. You don't want to have credit cards and close any of your old accounts or let the bank close them. So you might, from time to time, like once a year, use one of the cards that is not in your heavy rotation. So if you got an A card and you're using your B card, they are fine. They're not going to close your accounts. But you might have a C, D, E card. You might want to use those once a year. Make sure you pay off the balance, and then you'll keep that account alive, right? Those are the strategies that I've been using. And the key is that you have to do it every day. You have to make it a lifestyle. You got to make it a habit. And I've been doing it, I think when I first started, it was around 2014, all right? And again, today, I'm in the high 7s, 8s sometimes, and it fluctuates. It goes back and forth depending on if I get a new card or, all of these kind of things. But it's not because I'm just, I have all of this money, but I have access to a lot of credit now that I can now use for leverage. And then when I go to the bank with my LLC, I got my EIN and I have a great credit score. The banks are going to look at me personally and they're going to say, how much do you want?
Mhm.
How much do you want for your business to have? So now my business is benefiting because essentially my business is piggybacking off of my personal credit. And the business credit and small business administrations and your small business loans and all that, they want to give you a lot of money for your business because they know that you have what's called credit worthiness, that you pay, you like to pay, you like making payments. So they're not worried about the business. They want to loan you the money because they're hoping that you get in the situation and then they can start to get some money back off of you. The other thing, and this is the last thing I want to say, is that once you do this system, periodically, you can call and ask them to increase your limit, all right? Now, they'll sometimes call you and tell you they're going to increase your limit, or they'll just say, good news, we've increased your limit. What they're trying to do is get you to fall into the trick of purchasing more than what you can actually afford. You don't have to have a lot of money to do this system at all. You can use a $200 credit card. If that's what you have a month to spend, I don't know how you live, but if that's how you can spend in $200 a month, you can still divide that $200 a month into 30 payments and just swipe every single day and pay every single day. It sounds like a little bit of work, and it is, but it's so much worth it when you need to go to the bank, when you open up an LLC and say, hey, I want to open up a line of credit, want to get a loan, or I want to do something with this brand new business, we're going to need marketing and advertising dollars. Now, many of you are in this business right now, and I guarantee you that you, like me and Jasmine, when we first started out, we knew a little bit what to do, but we didn't have an idea of how to do it. So if you take this strategy and you think about what I'm saying, and you're using your credit cards and you're leveraging your business credit. Now let's just say, we're going to switch this at the next time I do this presentation to how to use this for your business, because this is personal. But then you're going to be able to do the same thing for your business credit so that whenever you decide to, you get these big checks from your settlements. In this game, you got to let that money ride over a period of time. Put that money into something that's going to make money with your money and leverage your credit usage, leverage your credit cards and your lines of credit or your loans to build your business credit over time and let your money start to earn interest and all kinds of things. You could become a hard money lender just off of using your settlement checks. You can do a whole lot of things in terms of investment so that your money is making money, and then you can use credit cards. See, American Express pays my bills. Capital One pays my bills. When it comes to the line of credit for the business, Wells Fargo is paying for Porterhouse, and then we're repaying these people to keep the relationship going with them so they can continue to increase our portfolio of what we can get from them anytime we need it. All right. So that's that, guys. I think I ate up all my time. So now I'm going to ask if anybody has any questions. I'm turning it back over to Angela.
That was some very valuable information. Does anyone have any questions after all of that information?
Hello everyone.
Does anyone have any?
This is Kermon McPayton.
Hello, Kermon.
How's everybody?
Good to see you back.
Yeah, listen, I just before I even say what I wanted to say, I wanted to thank everyone for all the prayers and all the thoughts and all of the texts and everything while I was ill. God is good. I'm on my way for recovery. I've already been healed. So I just thank everybody for everything, every prayer, every thought. You guys are wonderful. I love my Porterhouse family. And the only thing I want to say about what Mr. Porter said is this. Mr. Porter shared this with me, and I'm telling you, it changed my entire financial direction. Everything he said, I implemented. The only thing I have to tell Mr. Porter, full disclosure, is I kind of slacked off. but I was doing it every day. And I was doing exactly what he said. And every card that he got, I tried to match him. Everything he did, I tried to do. And I'm telling you guys, it works. I have a card that takes care of my business, and it does everything that he says. And I was paying it every day, getting everything down. It's excellent. And if you do it, it works. My score shot up. They started sending me cards. They started every time I turned around, I was getting requests saying, do I need a loan? Do I want to, get a loan? I'm pre-approved. It's fantastic. So guys, just do it. It helped me get through this situation I just came out of. I didn't have to come out with a lot of cash and everything. So it works. You do it, it works. That's all I want to say.
Awesome.
Well, that's incredible. I think it's pretty interesting. I always say I like going back to the basics. And, like Kermon just said, this is something he was, introduced to a while ago. And I'm sure that listening to this again, returning back to the basics will remind him of some of the things he was doing and kind of get back on track. So, I appreciate that comment as well, Kermon. Does anyone else have anything they want to add before we end the recording?
Angela, before you end the recording, one more thing I just thought about, guys, is that during that introductory period, the other reason why I use that new card is because a lot of times they give you a zero interest rate, zero introductory rate. That might be a good time to also, guys, if you have that existing balance and you do have some credit, but you need to get that existing balance down and you need more time to pay it down, you can simply transfer that balance on your name, and they do have cards that are specifically for balance transfers. You can transfer that balance to a 0% for a year or 0% for the first 18 months card, get rid of that old balance, don't use that card anymore, and then start to make the payments, like I said, every day, monthly, dividing it down, but you have a zero interest on that debt that you switched from the card where you were going to get huge debt to a new card that has 0% introductory. Does that make sense?
That's excellent.
So they're all kind of little tricks. Now, once you start doing this and you start thinking about the things that we talked about, watch this video over again, and start to implement it. If you get off this call and you start to do some of this stuff now, get your credit card comma downloaded, get your information in there and see what cards and products you're eligible to get. If you have existing balances, you might look for a balance transfer card. If you are brand new and you need to get a credit card, then it's going to tell you here, these people might give you a credit card, and they might be, cards that you never heard of, but if they're major cards that report to the bureaus, that's fine. Get them, start using them, replace your debit card today. That's all I had to say.
Well, thank you very much, Shay. That was some very valuable information. It was a little quiet, but that's sometimes a good thing because I'm taking notes and I'm sure others were taking notes as well. So thanks for sharing that. We do things to benefit our business, but we are a reflection of our business. So to get our personal finances in order is definitely something that's going to make us a little more confident when we're giving that advice, to try to help our clients. So thanks again for that information, and I want to thank everyone else for joining us on today's training. And I'm going to go ahead and end the recording.